The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 30th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, no problem. You can always send me an email. Let your fingers do the walking. That's steve@tfnn.com. Just inside the subject heading of your email, please put radio show question. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 277 points. 24,639 is the print. S&P up 32. 2722 is what she's printing. NASDAQ 100 up only 0.6%. The others are up over 1%. That's trade out at 69.70. Russell up 1.5%. The big mover and shaker out there. She's trading out at 16.48, new all-time high. Semis are up 0.5%. Trannies are up 1 3/10%. Spot volatility index down 11%. So we're going to talk about that. What is that possible meaning? She is trading out at 15.13. Gold's up $1.70. Silver up 13 cents. Light sweet crude up $1.49. There was a request yesterday that I did not get a chance to review, and so we're going to do that first. If you take the time to write, I am going to take the time to answer the question. Now, the question was my thoughts on basically, and I apologize because I don't remember who sent the email, and I just noted on my pad of paper to make sure that we looked at it. I remember the initials because it's DOC, which stands for the Detroit Optometrist Center. DOC. Yeah, for those of you in Detroit, you probably know DOC from a long time. What's the name of that physician out there? Yeah, it's been a long time, like 35 years or so, but I believe it's still around. And what is the name of that guy? Richard something or other. He's an incredible marketer. But that's not why you asked me. You wanted me to take a look at Physicians Realty Trust out here. And as we take a look at it, all I can say is this is basically dead money. I don't see a reason to go ahead and start a position in this. We can see that this thing has been trading sideways. We'll just simply draw that rectangle. This is a daily chart that we're looking at out here. When I say dead money, what it's doing, it's consolidating in between a level of maybe about 1443. Looks like it's going to head up towards the top of the consolidation. Maybe the top of the daily box, 1546. May even be the high from March 29th at 1565. But just sideways movement out here. And no reason to believe at this stage of the game that anything is going to change. If you're really hankering to go ahead and get in this investment vehicle out here, then wait until it comes back down to the bottom of the consolidation. Likewise, if there were a breakout, close above, we'd have to say the March 29th high of 1565. Well, then maybe you have, what is this? This is a 1440, a $1 trading range out here. So you'd be looking at a $1 breakout to the upside. So what do I see in DOC? Pretty simple. Dead money. The weekly chart really shows it out here. The weekly chart says, you know what? You've got substantial resistance at 1574. Try closing above that, because that's where the rifles are, the bazookas, where the sellers are camped out. That's at the 1574. So sorry that we couldn't get to your request yesterday, but we did get to it this morning. Ruby's asking a question. Steve, can you please help me place a stop on my euro position? Bought it yesterday. We can. It would be below the close of yesterday. And that was easy to answer. Now, we had, I think it was yesterday, because yesterday was Tuesday, was our first day back. And I remember John in Sarasota had sent in a request, and I was taking a look at the Euro futures contract, and he was trading, and this might have been last week too. I can't. But what I knew was that I had provided a downside target that when I looked at the actual Euro US dollar chart, which is what we're looking at right now, and I did that earlier this morning. And what we can see out here is when we start our wave count from the trading session out here on the trading day of April 17th, well, looks like yesterday is going to be a confirmation of wave number 7, letter G. So, whenever we get to that 7th wave move, the hair on the back of our neck stands. Doesn't mean it will turn, but we know enough, you and I, just our secret society, our community out here, we know enough when the market starts singing in the key of G, pay attention. Well, looks like what we have out here in the euro, Ruby, is an absolute change in trend. At least we do as of 112. That means the euro is headed higher. You'd like to see this close above Stevie's red line, 116.44 as we speak right now, to confirm that. And you'd like to see that regardless of whether today is a bullish engulfing candle or not. Closing above Stevie's red line, you can, in essence, see since the Tom DeMark setup, that was on the trading day of April the 19th out here, and there was a close below Stevie's red line. That has acted as resistance all the way down. Now what we're seeing is the beginning of a change in trend. You've got to close above Stevie's red line. Right now, what buyers are doing, they're attacking resistance. There's a 15-minute delay on my chart, so the euro could be, higher than where it's trading at right now. But the red line number isn't really going to change substantially. You want to see it close below that. Now, the question then, Ruby, and what I did was, seeing this, I sent an email back to John in Sarasota because I believe, based on his question, he was in this trade, and I didn't want, and all of a sudden my target to the downside had totally shifted. And I didn't want him necessarily be trapped by that position and that market call. And I'm grateful because he sent back an email, said he exited, he took his profits, and he was all set. And now that we see the chart and the way that it's trading at 113, I'm glad that I did that. And I'm glad that he took the action that he took. And with regard to where is it that the euro should bounce to, my price target becomes 119.40. It becomes the high of the trading session of May 15th. Will it get up there? I don't know. But it is my price target. If you're long, like Ruby is, that would become my price target out there. Let's check back in a couple of days out here, which in essence is going to mean Sunday. So if you're, I guess we can look at this. We can look at this tomorrow and Friday or what have you. But there should be a bounce, for a couple of days, maybe into early next week. But the price target becomes 119.40 for the euro US dollar currency pair. Steve Rhodes with TFNN. I'd like to field your questions as well. Phone lines are open. Email lines are open. Just contact us one way or the other. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 331. S&P is up 37. A question that came in: do those seventh wave moves always work? And the answer is no. I haven't found a tool out here that always works. Just extraordinary tools that help you and I to navigate in time, right, what the markets are doing. This is not about trying to buy the bottom tick, sell the top tick, although it's nice to do that. And if you're lucky enough to do that every now and then, it doesn't make you a better trader. It just makes you lucky. And it's nice to be lucky every now and then. But you and I, we utilize these tools that assist us with trying to identify where markets are going to make changes in trends out here. If we take a look at if the seventh wave moved, if the seventh wave move worked all the time, well, then let me share with you what's going on a 30-minute basis inside the ES Mini. You'll see right now it is in wave number 7. Now, this wave can't be confirmed until the earliest would be 2 o'clock out there. And this just may continue to extend upward. A very powerful move by closing the ES Mini on a 30-minute basis by closing above the green dash line out there. That is a Tom DeMark a trend line, the top of which was 27.20. So close above 27.20, which right now has become support, says, hey, this wants to move higher. How much higher, though, is really the question inside the ES Mini. And just put the inside your cap out here that we may be in wave number 7. We are for sure, starting with the bottom that took place in essence yesterday at about 3:30. But it could just simply be wave number 2 as well. That's what's going on inside the ES on a 30-minute basis. If we look at the Dow, we'll see that it, too, is doing the same thing. It is in wave number 7, letter G. It's gotten above that resistance level of that green dash line. Ignore the red dash line out here. But this is in wave number 7 on a short-term basis. This can extend through the rest of the day. No problem there. If we take a look at the NQ, what is it doing? Well, it had peaked in wave number 7 about an hour ago. Will it work? Will it hold? I don't know. It did on the way down, but it had friends and families. It had price moving lower with less relative energy. We don't have that same pattern moving at the highs, but nonetheless, you have wave number 7 that is in place amongst 3 of the 4 equity futures contracts out here. In the case of the Russell 2000, the one that is on fire out here, the one where all of the global flow of cash is flowing into. And this did get to wave number 7, but that's been taken out. Nonetheless, price is struggling at the top of its 30-minute profile out here. Now, when you get to wave number 7 on an intraday chart, the hair on the back of your neck, and I try to shave mine off just because it's kind of ugly looking out there, but it still stands up, no matter whether it's there or it's not. And it really stands up when you start getting to resistance levels on a daily time frame out here, or a longer term time frame. In this case, inside the NQ, if we take a look at what it is doing, we can see that price basically made it up to, or very close to, the top of its daily profile. The exact number out there is 70.1350. That's not the high of today, but we use these as kind of like a framework. What's really important about the NQ out here and that 7th wave move is the mere fact that this is a bearish structured box. I know for those of you that are new listeners out there, you're like, what in the Sam heck did he just say? I said a bearish structured box. Why bearish structured? Excellent question. That's why I ask myself, because the center line of the box, 69.32, is much closer to the top than to the bottom. Inside of this range here is where sellers are trying to, are happy to sell the market all day long. Doesn't mean they're right, but if you wanted to know where the defense was, it is in here. This is where the front lines of the defense are. If buyers can find the oomph to overtake those sellers, well, then price can continue to run higher. Higher to where? Back to its all-time highs, March 13th, and maybe even beyond out here. But right now, you're in essence inside the NQ on a daily basis at resistance. Even if that 7th wave fails, doesn't matter, because there's a line of resistance right behind it. That's not the case, I believe, inside the other equity futures contracts, but let's go peek in on those. Inside the ES, it can easily run up to the top of its box. That's 2741. Inside the Dow, it's quite a bit higher. That number is 24,971. And the Russell, that's on the very right-hand side of my chart. She's got a mind of her own out there because money is just flowing in terms of euros, in terms of pounds, in terms of yen, in terms of dollars. The Russell 2000 is just simply flush with cash from around the world. And that may be difficult to stop its advance out there. Something to think about. We do have another request that came in. That request out here is for JJ. That's for James. And James is looking to get back into MU. MU is the ticker symbol. So let's go take a look at it and provide the best information that we can. And what we can see as we take a look at Micron Technology on a daily basis, and James is looking, he says, as a trade or medium-term position. Well, James, at this stage of the game, as of 1:23 in the afternoon, what we have out here in Micron Technology is a failure on price and volume, as it appears, at the previous swing point for March 13th. That had 142 million. You're in right now with 60 million shares. Looked like it's going to fall short. A close below 63.42 says, don't take this trade to the upside. If anything, go ahead and short it. Am I suggesting that you short it? No, I'm saying go ahead and wait for the market to pull back. Pull back to where? Well, on these daily profiles, 53.30 is not out of the question. But before you get there, you've got to take a look at this breakout from May 22nd. And that would be 58.30. There was 111 million shares behind that move out there. 111 million, 58.30, 58.30 to the level of 56.47. That's where I would first be looking. You'll want to take a look at volume as the equity moves back to that level. On the other hand, let's go take a look at what is on the other hand. You've got 58.74 as Stevie's red line out here. So that too may be a level of support. You'll just simply have to watch as price and Stevie's red line catch up to each other. That means Stevie's red line is going to continue higher even while price is pulling back. It's just the way that that system will work out here. If this were to pull back and price closing below the 58.76 level, then you're back to the daily profiles out there at 55.30, 52.39. At this stage here, you've asked the right question, but today is not that day. You need to see some other levels of support hold up. Obviously, a short trading week out here I don't believe that was the case on March 12th when there was 481 million shares. So you have to do kind of the math conversion out here, right? 4 days, you divide the volume by 4 days times 5 to go ahead and compare it to March 12th. And you really can't do that until Friday. But, James, I would do that too as well to see if you've got a failure on both price and volume out there. And the reason is because you've got a bearish structured box on a weekly profile inside of Micron Technologies. Be very bullish to close above 63.42, but it does not have the oomph that it needs today. And a reason to go ahead and look to get long Micron is because there's nothing wrong with this monthly time frame chart. And this monthly time frame, you've got 1.03 million right now, but it's going into 1.5. It's going to be a tad short. Nonetheless, it's a very bullish pattern. But in the short term, Micron Technology, MU, also the name of a sake, looks like it's ready to pull back. Dow's up 332. S&P's 36. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Peter from Park City wrote in the Tiger's Den, wanted to go take a look at the gold contract. You've got the U.S. dollar index back 719 ticks out here, approximately, because I've got a 10-minute delay, trading out around 94.08. Obviously, the big move inside the euro as we speak is fueling a lot of that pullback. And I would expect, based on what we're seeing, we took a look at the chart for the euro, that this will continue. But gold is only up $2.20 out there. So those folks that used to party like it was 2018 because you saw the pullback in the U.S. dollar and thought, hey, gold should rocket to the moon out here. Not happening. And you've got to ask yourself the question, why? Well, first, let's go take a look and see what we can glean from just simply taking a look at gold priced in U.S. dollars. And the first place that you and I can start is by taking a look at our market profiles out here. We'll look at the 60, the 240, the daily, and the weekly time frames out here. Now, short-term positive, you've got a close above the top of its daily box, 1305. Short-term negative, it's going to run right into resistance at 1380. That's the bottom of its weekly profile. Now, what is what is occurring as we speak is you'll see so far, it's Wednesday, we have time to go, that candle or the weekly session, the bar has turned that orange color out there. Typically, when we see an orange colored bar, not always, but typically, we start to see a set of new profiles to form. So maybe we're going to get a new set of profiles come Sunday night. What we know right now with the existing set of profiles, Peter, is 1380. Maybe all she wrote. Maybe all she wrote out there. I know you'd say, well, but price is trading above the top of the daily box out there. And I'd say you're absolutely right. In fact, I would say if we take a look at the current gold contract out here, and we can see that, what's a beautiful thing here is we have seen the price of gold in dollars change trends. Very similar to looking at the chart of gold in euros out there. In the gold in euros, we saw how Stevie's red line was acting as resistance, very much like the case of gold. As it began trading lower back here on April the 20th. There was 2 days where price was above 3 days above Stevie's red line out here. And right now what we have is 3 days, 4 days now above Stevie's red line. Here's what looks like to me is going on with gold priced in dollars. You can see that yesterday's session was a black number 6. Maybe it's hard to see. I'll tell you that yesterday's session was a black number 6. That's using that Tom DeMark setup system out here. Today, unless something really goes awry, is going to be black numeral number 7. Tomorrow's Thursday, very likely going to be black numeral number 8. And Friday, black numeral number 9. Completing that setup. Now, if we take a look at what gold tends to do on those TD setup counts out here, well, we can go back to this trading session on February 9th as gold was moving lower. Get to that TD setup 9 count, changes trends, moves higher for 2, 4, 5, 6 days out there. Where's the next 9 count that comes into play? Well, this is on May the 2nd. Price is moving down. What happens? Get the 9 count. Price bounces higher for 2, 4, 5, 6 days out here. So come Friday, as long as we get that TD set up, pretty good chance what we're going to see out here, Peter, is a change in trend. Do we have to? No. But would we ignore it? No. And why is it that you and I can actually conclude that that is a possibility? We can conclude that because traders around the world, Italy or not, fear or not, are not piling their money inside of Goldilocks. We take a look at what's going on, gold priced in other currencies out here, whether it's the euro, whether it's the yen, whether it's the pound. Nothing is trading above resistance. Resistance being a previous red horizontal line on my screen out there. Those are swing points. Until those levels are taken out, you're trading inside of a range, so to speak. Inside of gold priced in dollars, it simply has struggled just to get back or close above the low from March the 1st out there. That would be one area. But I'm not going to discard the potential of that TD setup 9 count out here. What would change my mind is to see the global flow of currency going into this little metal out here. And that's not happening. And therefore, all we have is just kind of a non-interesting vehicle that we like to talk about. But now you and I can assess what's going on inside gold in the way that we should have always been assessing it, which is you trade it in dollars, and there's a guy or gal over somewhere in Europe. They're trading it in either pounds or euros. And then there's some other guys that just finished the sushi bar at about 3 in the morning, and they're going to go hit their screens and trade gold priced in yen. That's the way that the world works. The money is not flowing into the shiny metal out here. That's a different story if we were to go take a look at the Russell 2000. Because if we take a look at the Russell 2000 out here, this is where all the money is flowing. And I have to find it, and I've got so many of these charts out here. There we go. Here's the Russell 2000. And what you can take a look at, the Russell 2000 in dollars, left-hand panel. Next to it, you've got the Russell in euros, clear breakouts above resistance, daily time frame chart we're looking at. Then you can take a look at the Russell priced in yen, clear breakout going on there. Russell 2000 in pounds, clear breakout going there. This is where the money is flowing. It's why I'm uncertain about some topping patterns that exist. And I'm saying they exist right now as we speak. They're not completed. They haven't confirmed or anything like that, but they exist inside the Russell 2000 out here. They exist. But this flow of currency from around the world could say ixnay to those potential patterns out there. I don't know. We'll see how it plays out. We know what to look for. Peter, with regard to versus the gold contract and the euro, in essence, that's really what we looked at. And if I take a look at gold priced in euros right here, we would see that price is traded above, in essence, a consolidation level. But what price did was it got up to the September 6th area. Not right to it, but close enough. Remember, this is the close of the session. It may have hit it intraday, and it's turned back around. You can see how gold priced in dollars has failed to get back into the consolidation. But, Peter, we can't just look at gold priced in euros. We've got to take a look at gold priced in the other currencies as well out there in order to really assess what's going on. There's one thing that you know and I know. In order for anything to really get traction, you need to see all of the major currencies flowing into that. And look, major currencies, if you're looking for, hey, why are people, let's not ask the reason why. All we want to really know is where money is flowing. Whether it's out of Italy, it doesn't matter where it's at. It doesn't really matter. What we just want to know is where is that money flowing? And then the question you have to ask yourself is, do you want to get in front of that freight train, or do you want to hop on board? And the answer is you'll want to hop on board. You prefer to do it when you don't have some potential topping signals in play. That would be the caveat. Now, earlier in the show, as we started, we talked about the spot volatility index and where it was trading. So how about when we come back from this break, we'll go answer that question. What does that mean? I'll continue to check my emails, see if anybody else has a request in, and we'll just simply go from there. Dow's up 324, S&P 36. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, good news for Marianne Summers, for Professor Roy Hinckley, for Ginger Grant. You know those names? You'll know this once I say Eunice Lovey Howell and Thurston Howell III out there, along with Jonas. Yeah, that was his name, the captain, Jonas Grumby out there. Good news for them is that they're going to be saved. If we take a look at the NASDAQ composite, you know, nothing more bullish than a failed bearish pattern out here. And that was the island top that created that little Gilligan's Island. That was on the trading session of March the 9th through March the 16th. All those passengers were stranded with no way to get home. And what we can see is there is a ship that is arriving called the NASDAQ composite. It's been up to a high of 74.7137. 74.69 was the bottom of that gap. So there are people boarding the ferry. Are they going to leave from here? Or is price going to go ahead and head all the way back to its all-time highs out there, that being in the 76.37.27 level? Nothing more bullish than a failed bearish pattern. I imagine the same is going on inside the NDX 100, but this is the bigger freighter out there, that being the NASDAQ composite. Now, yesterday, Tim in Ohio, I believe it was Tim in Ohio, called and we were taking a look at it. He had asked great questions about the spot volatility index and the tool that Stevie has shared with you that I use in taking a look at what is the market going to do next. You know, the game of liar's poker where you put the market on your forehead, and what you and I get to look at and say is we say, hey, you know what, that spot volatility index, pretty cool tool out there. We stopped calling it the what do they call it out there? The fear gauge. It means diddly. How do you trade the fear gauge? But when you have a one-day rate of change, such as the other blue arrows out here, what you and I know is it's a bounce or a bottom that is coming. And you're just looking for those short-term patterns to tell you when that is taking place out here. Now, what we have going on today, that's with the one-day rate of change greater than 10%. When the session came to a close yesterday, it was, what, 28%, 28.74%. Certainly qualifies. Now, today, we're down to minus 13%. I put a green arrow. I don't know if it really will be a green arrow come the end of the trading session. But if you see a rate of change now below minus 10% out here, that actually is typically an initiation move. What we have to take a look at, or what we should take a look at, are those back-to-back days out there. See some other occurrences. So, for example, if we just simply go from right to left out here, we had the most recent one occur in the trading session. We got to go blue to green. You got to go blue to green. Okay, you can come back to March the 1st. March the 1st, you had a one-day rate of change of 13.2%. Positive. The very next day, you had a minus 12.82. That was an initiation to higher prices back to the prior swing point. The prior swing point being that of February 27. So maybe what we're really going to see here is a test of the swing point from May 22nd, which sort of makes sense to me. We're already trading inside of that. We take a look at the S&P 500. We'll go look at the SPYs. You can kind of gauge volume out there, but it makes sense to me that that's where price will go. Will it get beyond that? I don't know. If we look for other blue, then green, day after day, we can come back and take a look at the trading session of February 8th, a plus 20.66% move. And today, or the following day, take that back, February 9th, minus 13.15%. Was that an initiation higher price? The answer is it was. Price got up, didn't get back to the prior swing point, but it did make a move higher for really, it looks like a couple of weeks worth of trading sessions out there. Let's go see where can we get the next blue and green. The next blue and green candles. Mark, you can do this on your own as well. We would take a look at November 15th. November 15th, one-day rate of change of plus 13.29%. The very next day, minus 10.4%. Boy, that was a huge groove move to the upside out there. Where else? Do we have any other back-to-back blue and green days? Close but no cigar back in May of 2017. It is this one. Did this one was that was a minus 14? Nope, not. I was looking back at the lows on November the 4th. So just trying to find other instances of that. Blue, green. Yeah, here you've got one on September 9th, 2016. One-day rate of change, 39.89%. The very next day, minus 13%. Prices moved higher, went back to the prior swing point and to a gap that was to the downside. So it's not a ton of examples there. I don't know, 5 or 6 that we just went through. But, 5 or 6 is better than 0, all right? And this is not a 0 with regard to what's going on inside of the market. So will those seventh wave moves hold on the 30-minute time frame? And even if they do, they could be short-lived out here. So watch the spot volatility index today. See what its close is. If it is below, south of a minus 10%, well, then what you've got is at least an initiation move, at least back to the highs, which is not that much higher from May the 22nd. I suppose if you take out May the 22nd, then we have something else going on in the market. Okay, let's go see what else. Let's see if we have any other questions. Anybody in the den need anything out here? Kind of help me fill the next 2.5 minutes, and then the 2.5 minutes after that. I don't see anything, so not really sure where to go. I think where we'll go is we'll just simply go take a look at some of these equities that are moving out here. Let's go take a look at Booking Holdings, BKNG out here. Let's look at it on a daily basis. Let's go put our market profiles, see what kind of information we can glean out of this equity. The price movement here, don't let that scare us. Let's just simply go take a look at what it's doing. And back a couple of days ago, I know somebody had sent me a question. What did I think about Booking Holdings? This was last week, and I believe my response was it was going to make its way up to the 21.1826 level. It actually got up to 21.1891. So I was off by 70 cents. Of course, that was nothing more than getting up and testing the top of that daily profile. This thing is really stuck in kind of a range after that gap to the downside back on May 10th with some pretty big volume out here. So it's not going to get any higher until it closes above the 21.1826. It's not going to get any lower until it closes below the bottom of the weekly profile, 2029 out there. And that is Booking Holdings, BKNG. Let's go take a look at Coherent Inc., COHR, struggling today, down 7%, wide-ranging bar to the downside. Coming back into yesterday's, I suppose, sign of strength. I don't suppose. It was a sign of strength. Let's get rid of those profiles out there for the moment because we can see that this had volume. Sort of wide price spread. Doesn't look at it if we look at the candle, but you have to fill in the gap. Nonetheless, this moved higher yesterday with 1.1 million shares. So far, you're pulling back with 462. What do we see inside of Coherent? Is there anything coherent inside of Coherent, COHR? I don't know the answer. The only way to find out is to go take a look at Stevie's other chart and set of tools and see if we can find some type of bottoming pattern. And the answer is, not really. Looks like this is pretty much dead money as well. COHR. Nothing that pops up on my screen immediately, and it would need lots more investigation, and we're not going to do that because we're going into a hard break. So when we come back, we'll finish off today's show. I don't know what we'll cover, maybe just a summary, but you've got the Dow up 334, S&P up 37. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Folks, down 322. S&P is up 37. So for the last couple of minutes here, let's go take a look at something we haven't talked about. I'll be filling in for Tom from 4 to 5. If you could join me then, I'll share with you some information that we haven't even taken a look at here. We'll show you the topping patterns that exist inside the Russell 2000, something to think about, and I'll show you some other information as well. The key here today, we talked about the one-day rate of change. What happens if we don't see a one-day rate of change below 10%? Don't fret about it. Just means you don't have that back-to-back, what we'll call initiation move after a false scare. But as long as the spot volatility index closes below the 50-day exponential moving average, that's the number to really be paying attention to. That number is 1571. You're trading at 1482 as we speak right now. When The spot volatility index is below the 50-day exponential moving average. That's always a positive for the S&P 500 out here, especially when the spot volatility index continues to move lower. What you'll see inside the S&P 500 is it'll continue to move higher. So what we know about that is what to look for at the end of the day. With regard to the S&P, what would that mean? Look, any push higher is going to run into resistance, should run into resistance. And that price level is 27.4125. You're at 27.25. So it's another 15 points, give or take, to the upside. Should be able to be achieved between today and tomorrow. That's Thursday and Friday out there. And then we'll come back as that is occurring to see what happens. So you've got the ES heading up towards resistance. The NQ the same. The Russell, no resistance in sight. Inside of the Dow Equity Futures contract, the number would be 24,971. Don't know if it can make it. If it's a little engine that could, it's really the big engine, and maybe it's the big engine that can't. So thanks so much for staying tuned here, or tuning in, I should say. But stay tuned, because your favorite polar bear, my favorite polar bear, he's back in town. That's David White. So stay tuned for him. You've got Basil Chapman from 3 to 4. I'll be back with you from 4 to 5, or tomorrow from 1 to 2. Take care. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.